Okay, good morning. Thank you for tuning in to another edition of the Vulcan Report. We'll make this quick, short, simple, and sweet. All right. As you know, a lot of things have transpired over the last couple of days. I've been busy in the lab trying to work on some updates for the spreadsheet. You'll notice that we last discussed aggressive versus conservative entry points. One thing I want to point out to you is when you're looking at possible reversals in a bull market, you'll notice that on the spreadsheet you'll see a bullish indicator. You always want to get in the habit of looking at the trend indicator so that you know where you stand within that trend. And you'll notice too that when you get those positive bot checks back, those positive bot checks are alerting you to some type of selling pressure or bearishness that's creeping into the market, whether it be behind the scenes or you see some unusual activity in the options markets or what have you. That's what that's for. It doesn't necessarily mean that the market is getting ready to turn right here, but it does alert you in advance to that possibility. One thing that you want to also take a note of is that when it comes to a bullish trend cycle, and we're looking at capturing the reversal, the best thing to do is wait for a confirmation of that trend change. Example: when you look at the negative pulse wave, which is your stop and reverse price area, you're going to notice that if the current support low is below the stop and reverse negative pulse wave, then you're going to want to go ahead on the following trading session and you're going to want to sell that support low. Okay, that's the conservative entry point in a bull market when you know the market's ready to change on you. You also know that in the last few trading sessions, we got really close to hitting those support lows, and in the S&P 500, which is the chart we're looking at now, we actually hit that. We actually hit that 1171. We didn't close below it; we just touched it. So, had you had taken an aggressive entry there and sold that 1171, you would have got caught in a whipsaw, and you would be stopped out for loss. That's why it's better to let the market confirm first, and then take the more conservative approach, especially when you're trading against the major trend, and you're getting signals that the trend is possibly ready to turn on you. So conservative entry points. Likewise, in a bearish market cycle scenario, if you want to wait for a close above that pulse wave and wait to get that signal. You know that the spreadsheet's giving you the signal because you'll notice that today's resistance high is above the pulse wave. So you're going to go ahead and buy a break of that resistance high on the following trading day. That's how that works. Okay, so just keep that in mind. That it's better to play it safe and let the confirming signals hit you when you're trading against the trend and you're looking at a possible reversal of a trend. Now, when you're trading with the trend, it doesn't matter. You know, I've already taught you how to use the pulse waves, and you can literally place your tickets on Monday and walk away. You can literally place your tickets on Monday and just wait for the market to come to you, and it trades like butter. What you will notice too, though, once we get to a point where the trend may be getting exhausted, you're going to have to sit in front of the computer and you're going to want to track and follow that trade so that if we don't close above that pulse wave, and let's say that's the last pulse wave cycle, when those last wave cycles come, you have to be quick on the trigger and take what little profits you can get before the market reverses, okay? And that's what happened here. We got our last pulse wave right here on this bar right here. If you go back and look at your sheet for November the 14th, you'll notice that we broke pulse wave, all right, on the 14th. So you had to be quick to take profit the following day, if not same day, before the market reversed on you. That's what I mean by that, okay? So you have to be mindful of your pulse waves and be mindful of the overall trend as we're moving here. Now, one thing I want to point to is that you see this last pulse wave cycle? This bar is looking very similar to the bar that we're creating today. So we could actually just be putting in another run here, another top for creating a down channel, and we could have another down leg like this. This would carry us well into the Kumo consolidation cloud at 1137 in the SPX, down to the trend line support at 1111, and ultimately testing the 1103 bottom of the Kumo consolidation cloud. So this up bar does not necessarily mean that the bull trend is still going to continue. It still has to hit resistance here at this 1224 level. Okay, we still got to close above that in order for this movement here, this whole thing here, to be considered support building. Okay, if that doesn't happen, then we're not going to 1300 in the SPX. We're going to 1100. All right, so I just want to point that out. Don't chase today's activity. You know, a nice explosion gap up. Let this confirm. Let's see where we close today, and then possibly we could have some fun tomorrow. All right, or even in the overnight market. So again, just a word of caution here. You know, be careful. You don't want to chase markets. Let markets confirm what they're going to do first. This is a nice bar, but we do need to see a continuation of this. If we don't, then we may have a problem. Okay? So I just want to point that out to you. Let's take a look. Same thing with silver. Hopefully we are building support, and the markets are going to continue to rally, at least on a fundamental basis. But again, we are hitting some resistance up in here. So just be careful. This was a spike top. This was not a top where we closed. This was a spike top. All right. The real high was right here on the November the 8th in the silver, with a close of 27.73. Okay. That's what's up. We failed on the 11th to close above it. We failed on the 9th, the 10th, the 11th, and the 12th. So we need a close above here. And then the next test will be a close above this spike high. If we can't do it, then again, silver's going back down to 22 and 20, and we'll just consolidate between 22 and 19 for ad infinitum. Who knows how long. All right. It's just the way the markets move. It's the way the markets work. I understand all the fundamentals involved, and you know what's going on in Ireland and Greece and Portugal and Spain and all the other places. That's irrelevant. Prices are going to do what they do. Prices don't always match fundamentals. I've done videos showing you where the fundamentals were totally disconnected from price. All right. So right now we're looking at possible irrational exuberance. We will buy a continuation of today, but right now we're standing aside this. Let the market see what it wants to do, and then take it from there. You'll notice that the system did give you buying points in this, okay? But because we got the spreadsheet out to you late, you weren't able to take advantage of it, which you know is just how it is sometimes. Finally, we got everything up and running now since the storms from the other night, so we're okay now. We're good to go. Everything is up and running, but just want to give you the heads up on that. Even with what you were given today, activity in the overnight market, unless you're going to stay up all night long, you're not going to be able to really take advantage of what happens in the overnight. You just hopefully you can get a nice, decent pullback on an intraday and then get in there on a continuation, but it's not pulling back right now. So you got to stand aside and let the market do what it's going to do. But I just want to give a warning of caution that, again, you know, we're not married to positions in the market. You know, we're not bullish or bearish. We just want to trade with the trend. The trend is still intact. We pulled back and got here, but because of this spike in the bar that we have, this is problematic. The market's going to have to really work hard to close above these two price points. Okay, so anyway, that's all I wanted to cover here. Let me just go into to gold real quick, just to give you a full orb view of what's happening in the metal complex. Notice that gold had a similar situation. Okay, we had here a close on the 8th of 1410, and then we failed for the next 3 days, and then we collapsed here. So again, same picture with gold. Got a lot of hard work in it. if we're gonna overcome this. Okay, if not, then we're back down to 1300. We're going to range between 1316 and 1271, and maybe even ultimately the trend line support of 1199. So that 1200 area right here is going to be very, very, very crucial. So we still got some work to do. Nice, nice, support building between these two candles right here. Only time will tell if we get a continuation until tomorrow. If not, then we head back down. That means we have an established down channel. We establish the lower support area of the channel, and these two bars here could actually establish the high end of the channel. So just a word of caution, okay? Trade it, but don't marry it. You're gonna have these are days that you're gonna have to just be in front of the computer and watching it. All right. We'll cover some more stuff in the live chat. We can't give out all of our cookies here for free in these videos, but I just wanted to point out a few things to you guys. So those of you in the premium chat, you know what I'm talking about, and just watch your price levels today. Keep an eye on your price levels. That's all I can tell you. All right, see you in the chat.